Hello everyone. Hope you all are good and hope you have studied the previous ratio explained to you from chapter 5 part 2 accounting ratios and analysis. Lastly, we have finished understanding liquidity ratios. The last lecture was about liquid ratio. Yes? Prior to that, we have understood current ratio and we're going to continue with the same chapter and a new topic, that is solvency ratios. Before we start with this topic, we'll quickly revise whatever we have done so far. So firstly, we have understood a bit of theory, the definition of this chapter. The definition of the accounting ratios. Thereafter, we have started with a topic called profitability ratios. In that, we have completed 4 ratios. Firstly, gross profit ratio, operating ratio, operating profit ratio, and net profit ratio. Then we have started with liquidity ratios. In that, we have understood 2 ratios. One is current ratio and the other is liquid ratio. Yes? And today we are going to start with solvency ratios. The topic is given on page number 228 in your textbook. Yes? So starting with that, generally economic or financial solvency is considered in context of long term. Solvency is used to measure economic health of business entity. This ratio is used to measure how far the business entity is competent enough to pay long-term liabilities. Obviously, you know the meaning of the word long-term liabilities. There are 2 types of liabilities in the business, non-current or say long-term and current liabilities. Yes? So, with the help of solvency ratios, we get to know about, this ratio is used to measure how far the business entity is competent to pay long-term liabilities. Ratio is computed for economic aspects. And the following 4 ratios we are going to study under the topic of solvency ratios. Yes, of which the very first is debt to equity ratio, total assets to debt ratio, proprietary ratio, lastly, interest coverage ratio. All right? The very first ratio we are going to study in today's lecture from solvency ratios, the topic that we have taken is debt to equity ratio. All right? So starting with that topic, debt to equity ratio, it is again given on the same page, on page number 228 in your textbook. Debt to equity ratio shows relation between debt and shareholders' funds. Now this is a liability. What are shareholders' funds? That will be explained to you. This ratio indicates the proportion of equity against debt. Here, equity means shareholders' funds. Equity share capital and reserves and surplus are included in shareholders' funds. Now, if you remember chapter 1, equity shareholders are actually the owners of the company. Yes? So, the funds, shareholders' funds, and also the reserves and surplus are added to same. A business entity is considered as solvent when the proportion of equity is greater than debt. Obviously, equity share capital is the capital of the company, whereas debt is a liability. So obviously, when the proportion of equity is greater than debt, business entity is considered as less solvent when the proportion of the equity is less than the debt. Yes, it is considered solvent when proportion of equity is higher, and it is considered less solvent when the proportion of equity is less. Obviously, if the capital is higher, it is solvent, and if the capital is lesser, or the proportion of capital is less in proportion to debt, then the business entity is less solvent. You cannot say insolvent. So, simply speaking, the formula for debt to equity ratio is non-current or long-term liabilities upon equity shareholders' funds. So, you need to obtain the answer for these two things from the given question, and you will substitute that answer in the given formula and you will obtain the answer. Now, you know very well about long-term liabilities. It is given on liabilities side. Mostly, if I want to give the example, I can say a loan taken from bank, debentures, both of them are long-term liabilities. Yes, the balance sheet has two sides, a liabilities side and assets side. Yes, on liabilities side, the very first thing is shareholders' funds, that is equity, share capital, reserves and surplus, etc. etc. The next thing that you have is non-current liabilities, then current liabilities. Yes, all right. The liabilities side is known as the equity and liabilities side of balance sheet. Yes, balance sheet is having two sides. Liabilities side, which is equity and liabilities side, where there is shareholders funds, non-current liabilities and current liabilities. Yes. Then on the asset side, you are having non-current assets, investments, current assets, fictitious assets. Yeah. Fine. Moving ahead. If we are talking about the liabilities, liabilities means long-term liabilities. The most important point to solve the short sums from this chapter for obtaining debt equity ratio. Liabilities means long-term liabilities where long-term borrowings, deferred tax liability, other long-term liability, long-term provisions are included. So this many things are considered for calculating long-term liabilities. But for computation of this ratio, deferred tax liability and other long-term liabilities will not be considered. So while solving practical sums of this ratio, they say the deferred tax liability and other long-term liability will not be considered, will not be given. So you have to consider only long-term borrowings and long-term provisions while obtaining answer for long-term liabilities. All right. The next thing, yes, talking about shareholders' funds. We are done with the first part of the formula, long-term liabilities. What is included in long-term liabilities we have understood well. The long-term borrowings and long-term provisions. Talking about shareholders' funds, again an important point. Equity share capital plus preference share capital plus reserves and surplus. If debit balance of profit and loss account is in the balance sheet, it will be deducted for the determination of shareholders' funds. The arrived amount of shareholders' fund will be used to compute this ratio. Preference share capital is included in shareholders' funds. So as I said that we have understood the first portion of the formula, which says long-term liabilities, and for that you have to write down this point. And while understanding shareholders' funds, it says equity share and preference share capital plus reserves and surplus. You know very well what are reserves and surplus. But an important point that they've highlighted is that if there is debit balance of profit and loss account, it will be deducted from this. If there is credit balance, already it is added here, but if it is debit balance, it will be deducted. And the arrived amount will be considered to calculate debt to equity ratio here. Yes. If you will keep all these points in your mind, they will be clear when applied in sum. Yes, so not to worry if you have not completely understood the theory, because basically when it will be applied in practical sums, it will be totally clear. So objectives and trend you will read, it is just simply a part of theory. We are going to start with illustration 16 related to the topic for today. But before that, we are having an important note here. When in question, total liabilities are given with a view to arrive at non-current liabilities, deduct current liabilities from it. When in the given question, you are provided with total liabilities, but for obtaining debt to equity ratio, you have to consider only long-term liabilities. So how will you obtain? You will deduct current liabilities from total liabilities and you will get non-current liabilities. Yes? Fine then. Illustration 16. From the following information of FL Limited, calculate debt equity ratio. So you are provided with necessary information. You are supposed to calculate debt equity ratio. So firstly, once you will read the question, whatever you are instructed to find, you should be ready with the formula for that first. Yes? What is the formula for obtaining debt equity ratio? It is long-term liabilities upon shareholders' funds. Yes? So, what are long-term liabilities? We have understood here. You will keep this point in your mind. And on the basis of this, we are going to calculate long-term liabilities at first. So, let me find out. This is shareholders' fund, this too, this even. This is current liability. And yes, long-term loan. This is a non-current liability. Long-term provisions. This is also a long-term liability. Yes, let us see the point. Long-term provisions, long-term borrowings. Loan is long-term borrowings, long-term provisions. You can see? So, long-term liabilities or non-current liabilities. Long-term loan 2 lakh, long-term provisions 2 lakh. So total non-current liabilities 4 lakh. Yes? The second thing that you want to obtain is shareholders' funds. So shareholders' funds, what is the formula? Equity share, preference share, reserves and surplus. So in the given question, equity share 10 lakh plus reserves and surplus, general reserve, profit and loss account. Now if you are thinking, ma'am, how to understand that the given balance of profit and loss account is debit balance or is credit balance? So let me clarify this. Unless and until instructed that the given balance is debit balance, yes, only then it is to be considered debit. If nothing is mentioned, it is always credit balance. Yes? So this is credit balance. Now we are obtaining shareholders' funds. Preference share capital nahi hai. Equity share capital is provided. So equity share capital 10 lakh plus general reserve 6 lakh as per the question plus profit and loss account 4 lakh. So 10 lakh plus 6 lakh plus 4 lakh is 20 lakh. Yes? So putting these two figures in the formula, 4 lakh upon 20 lakh, the answer is 0.20 is to 1. Again, the answer is to be presented in the form of proportion. Yes? Alright then, here the explanation of the answer is given that you may read, you will easily understand. Alright? Fine then, the next one. Yes, the next illustration that we are going to understand is illustration 17, but before that I can see an important note here. Outstanding expenses and current liabilities will not be included in debt equity. Only non-current liabilities will be considered. Obviously, why only non-current liabilities are considered? Because in the given formula, it clearly says long-term liabilities. So obviously, you cannot consider current liabilities here. Alright? Fine then. Starting with illustration 17. Total assets, long-term loan, long-term provisions, current liabilities. Yes? And you are supposed to calculate debt equity ratio. The very first thing that we are doing is we'll write down the formula. Debt equity ratio equals to long-term liabilities upon shareholders' funds. Firstly, we'll calculate long-term liabilities. In that, I'll consider two items. Long-term loan 6 lakh, long-term provisions 4 lakh. So what is total non-current liabilities? 10 lakh. Long-term loan 6 lakh plus 4 lakh, 10 lakh. So these are non-current liabilities. Yes? Okay. Now the second thing that I want to obtain is shareholders' funds. What is included in shareholders' funds? Equity share capital, preference share capital, reserves and surplus. But nothing from that appears to be mentioned in the given illustration. So what we are going to do? You need to think. You need to use your common sense here. See, total assets. Assets are of no use in this ratio. Still the answer for total assets is given 25 lakh. There might be some reason behind this. Because the information is given, that means obviously it is useful. Yeah? So, let us consider it from the base. Your balance sheet is having two sides, asset side and liabilities side. And the total of both the sides of balance sheet is always identical. Isn't it? Yes. So if the total of asset side is 25 lakh, then obviously the total of liabilities side is also 25 lakh. Yes? I repeat, if total assets, that means the total of asset side of balance sheet is 25 lakh, then obviously the total of liabilities side of balance sheet is also 25 lakh. Yes? Now what is mentioned on equity and liabilities side? That we have understood here. Equity and liabilities side, shareholders' funds, non-current liabilities and current liabilities. We are provided with the information of these two and the total of liabilities side. So if we will deduct the amount of these two from total of the liabilities side, we'll obtain this. Simple. Let us see the solution then. Total assets 25 lakh. Total assets minus long-term liabilities, which is 10 lakh, minus current liabilities 5 lakh. So the answer that arrives is obviously for shareholders' funds. Yes, which is 10 lakh. Yeah? And putting these two figures in the given formula, you'll obtain the answer 1:1. The answer for debt equity ratio is presented in terms of proportion always. Yes? And here we complete illustration 17. I will repeat the explanation of shareholders' funds. See, understand, the total of asset side is given 25 lakh. Long-term liabilities and current liabilities are given. Yes? We have obtained 10 lakh as the total of non-current liabilities. The second question is how to obtain shareholders' funds. Firstly, total of asset side is 25 lakh and so the total of liabilities side is also 25 lakh. Yes? Now, another question is कि liabilities side होता क्या है? It is shareholders funds, long-term liabilities and current liabilities. So long-term liabilities and current liabilities मिला के होता है 6 lakh plus 4 lakh 10 lakh plus 5 lakh 15 lakh. And the total of liabilities side is 25 lakh because the total of asset side is also 25 lakh. Yes? So out of 25 lakh, if 15 lakh is of liabilities, so what about remaining? Obviously, there is only one option. Shareholders' funds. So remaining 10 lakh is of shareholders' funds. So this way we have obtained the answer for non-current liabilities and shareholders' funds. We have substituted the answer in this formula and we have obtained the answer, that is 1:1. Yes? So that's all for illustration 17. Hope you were able to understand. It was quite simple and easy. So moving towards the next illustration, yes, there is a balance sheet also for a better explanation of this, that how we have obtained equity shareholders funds. See, as I said, there is a balance sheet. The total of asset side is 25 lakh. The total of asset side is 25 lakh. So the total of liabilities side is also 25 lakh. Yes. And what appears to be on equity liabilities side? Shareholders funds, non-current liabilities and current liabilities. So this we have to find out. This is provided. This is provided. So from this, if you will deduct these three amounts, you'll easily obtain equity shareholders funds, which is 10 lakh. Yeah? You can also prepare balance sheet. Either you can solve it in other way with the proper calculation. Yes? Fine. Moving ahead with illustration 18. From the following information of R Company Limited, calculate debt equity ratio. The information, the question is provided here. Non-current assets, current assets, total liabilities and current liabilities. We need to apply a note that we have understood here. This one, when in question total liabilities are given, you will deduct current liabilities from it. That note is to be applied here. Total liabilities are given. Now if you want to obtain non-current liabilities, you will have to deduct current liabilities given here. Hope you know the difference between non-current and current liabilities. Yes? Fine then. Firstly, the formula we have written, we want to obtain debt equity ratio. So long-term liabilities upon shareholders funds. Firstly, we'll obtain long-term liabilities. Non-current liabilities, long-term liabilities. Total liabilities 15 lakh minus current liabilities. Current liabilities are creditors, bills payables, outstanding expenses. Alright, we have followed this note. Total liabilities are given when in the question you have to deduct current liabilities from it to arrive at non-current liabilities. Why? Because in the question we are supposed to use non-current liabilities. So that is what we have done. This is total liabilities. From this we'll deduct these three current liabilities. Creditors, bills payable and outstanding expenses are current liabilities. So from total liabilities 15 lakh we have deducted current liabilities and total non-current liabilities are 13 lakh this way. 15 lakh minus 2 lakh. 13 lakh is non-current liabilities out of total liabilities. The next thing that we want to obtain is shareholders funds. So shareholders funds is total assets minus total liabilities. What are total assets? 28 lakh and 17 lakh. So what is the total of asset side? 45 lakh. Again, the concept that we have understood in the previous illustration is applied here. In that question, total assets were given. Here, they have split. This is non-current assets and this is current assets. तो asset side तो दो ही चीजें होती है. So 28 lakh plus 17 lakh. What is the total of asset side this way? 45 lakh. And as you know, the total of asset side and liabilities side of the balance sheet is always equal. So 45 lakh is also the total of liabilities side. Yes, we'll deduct the liabilities 13 lakh and 2 lakh. 13 lakh is long term, 2 lakh is current. This is non-current that we have obtained. This is current. Total liabilities 15 lakh. Total assets 45 lakh. If the total of asset side is 45 lakh, also the total of liabilities side is 45 lakh. From 45 lakh, you will deduct non-current liabilities. You will deduct current liabilities. So what remains is 30 lakh. This you have obtained, which is obviously for shareholders' funds. Yes? So this way you just have to use your common sense. Yes? Whenever the question is asked in a twisted form. Yes, everything is mentioned in the question. You just have to obtain the right answers. Yes? So you will place these figures in the formula. 13 lakh non-current liabilities that we have obtained here. 30 lakh shareholders funds that we have obtained by preparing a balance sheet. And the answer obtained is 0.43:1. As I said, the answer is to be presented in terms of proportion. Alright then, with this we have completed illustration 18 also about calculation of debt equity ratio. So your homework for today is the sums of similar kind from exercise, which is question 9, question 10 and sum number 11. Alright, you will practice these sums. They are extremely easy and are similar to the illustrations that we have solved in today's lecture. You will cross-check all the answers with the answers given at the end at the back of your textbook. And in case if you face any difficulty in finding or obtaining any answers, you will please let me know. With this, we complete this lecture today. And in the next lecture, we are going to start with a new ratio from solvency ratios. Yes? So that's all. We'll see you in the next lecture. Till then, stay home, stay safe, and study well.